All right, we're live. What's going on, Tim?
Dude, loving the life, man. You see what's going on with the bond market? It's crazy.
Not a big follower of the bond market, Tim, but why don't you enlighten us?
So the bond market is kind of like if you really, the higher end, the intelligence, the predictor of
You
where
saying
rates.
only smart people watch the bond market? Or what are you
No,
saying,
no,
Tim?
no. It's one
Huh?
of the things where the lending people are like, can
Rich
we go
people?
down? Yeah.
So
No,
rich people watch the bond market
not rich
and
people,
lenders.
lenders. That's it
Okay,
right
just
there. Yeah.
lenders. All
So,
right.
so we're watching what's going on because we've seen rates kind of go up the last couple of weeks. We've seen things kind of slide up, right? But there's an indicator called it's a 10-year Treasury bond, and it kind of indicates where the future of rates are targeted to be. And the 10-year Treasury right now is selling at like 3.45, which is really low. Where the 2-year Treasury is selling at 4.283, which is high. So what it tells us is that short-term rates are up, but long term, we expect rates to be coming down. That's a great thing. That's a
So
great.
this is different than what we were hearing recently with Fannie Mae saying rates were going to go up until the third quarter of 2023.
Yeah, I think really everybody's looking around saying, "Hey, the recession's kicking in, inflation's starting to come down." We're still saying the Feds are going to raise the rate still. The whole prediction right now is about 0.5%, half a point in the next week or two when they have their
So
Fed
the
meeting.
Fed is going to raise rates again. Does that automatically mean rates are going up again?
No, because I think right now the treasuries are starting to realize from a long-term standpoint that this is temporary in nature. And as such, that temporary bump up is going to result in a long-term bump down. That's huge, Brian.
Yeah, I got you. So, it's kind of a misconception that the Fed raises rates, interest rates go up. That is overall a true statement, but it's like the stock market. A company could make money and the stock could go down because they didn't make as much as they thought they were going to make. So it's like this whole predictive thing.
Correct.
So what do you think this means for real estate what about winter 2023 coming up here?
So here's the thing. I mean, everybody says, do I wait to buy? When's the crash going to happen? What's going to happen, right? Oh, I tell people, look, you know what? First of all, there's still that extreme limited of inventory. We talked about that, right? There's not enough houses on the marketplace.
Yeah.
Now's the time to go in and negotiate your deal.
Yeah.
Get your closing help, get your repairs,
Right.
get the house that you really want. Sellers are highly motivated. Everybody's fired up. And then you and I've always talked about this. We marry the house, but we date
And you
the
pay
rate,
your
right?
taxes.
No, we pay taxes too.
Yes.
But the thought process has come next fall, right? I think fall of 23 in the winter, we'll start to see rates come down into the mid fours. Great time to jump in at that point, not time and do a refinance. So,
all right.
To me,
so you're saying that it's likely that rates will come back down in the next year. So if you bought today, no promises, no guarantees. We're not predicting the future finances. We don't play one on TV, but the idea there is if rates come down, you can refinance.
Exactly.
And okay, so what are the sales like going on right now, and like what are the trends in the housing market here in Maryland?
So believe it or not, I literally just pulled this up half a minute ago. And I have October stats. Remember, I don't have November stats, but
not for 4 more days.
Yeah, exactly. So what's happened is the unit sales are down. And remember, it's always like a behind the curve, right? That's because we jacked up into the sevens, right? In November, everybody got freaked out. I got to be honest with you, the last 2 weeks, man, it has been just the phones have been ringing off the hook.
Yeah.
Everybody wants to know. They're seeing rates come down. They're thinking I better jump in now before rates continue going down. Jump in, make my acquisition, cut my deal, negotiate a heck of a deal with the Brian Mayer team, make it happen, right? Come on now.
Yeah, and I think a lot of people assume that because the rates have gone up and you hear all this news about the housing market crash, like you have to, and there's no way for the average person to do this, even us in the business, like you have to study this to kind of understand it. But if you zoom all the way out, we're still in historical real estate market. We're literally, like, I look at it as we are getting the camera here, right over the edge of the mountain, of the top of the peak of Mount Everest. We're still at the very top. We're still seeing multiple offers. We're still seeing houses selling very quickly. Days when the market's down, inventory is still very, very low. It's still a great time to sell your house. It's now become decent time to buy your house because you can get closing costs paid. You might be able to have 15 minutes to make a decision where you didn't even have that before. You might be able to look at more than one house before you have to decide. You know what I mean?
Well, and Brian, here's another indicator. If you really want to jump in, look at the Maryland mortgage program. I mean, that's the state of Maryland telling you what they're doing right now. And then so let's just take the entire lending industry kind of out of the equation. Take the Maryland mortgage program, which is, CDA, Community Development Act, right? Administration out of Annapolis.
Mhm.
They're already showing some phenomenal rates as well. I mean, you can go on in and check that as well.
Yeah.
So things are looking really sweet for long.
So you're talking about down payment and closing cost assistance programs. You're saying that the rates are getting better because the overall. So what's the big picture? Is the Fed like freaking out because they raised rates too high? Now they're
I think
what's
are reconsidering their actions. They're starting to see the impact of having raised the rates so fast. They're seeing the housing industry take a huge plummet, huge slowdown. And I think overall, the Feds don't want to crash the economy either. I mean, they're trying to keep things in control, protect the economy, protect the dollar, protect the U.S., right?
Yeah.
So to me, I think it's a great time. I mean, to me,
it is.
You ask me, should people hold off? I don't think they should. I think
from a seller's perspective, I think that we're not going to see a crash. You're not going to lose all your equity,
right.
But there still is a number of indicators saying that the values will adjust negatively. How much negatively is hard to say. Like 1% to 2%, not a big deal. 4% to 5%, 10%. Now you're seeing real money. You know what I mean?
I don't think we'll see 10% because if you look at all the statistics and the number of people that still don't have housing, Brian, people are looking around what's going on and they realize I still got to buy a place to live. There's still some opportunity. There's only 1.5 months of inventory in the marketplace available to buy. That's huge. It really is. And that goes into play. Now, at the same time, not only do we have that factor in play, but you know what? Inflation also means people's wages are starting to go up. They can afford more, and they're reworking their own budget accordingly. So
Gotcha.
Opportunity there.
All right, Tim, always informative. I appreciate your time, man.
Good to see you, brother.
Yeah, have a great week. See you soon.
See you soon, man. Talk to you.